Hey guys, welcome back. You're still watching Business Lunch, and there's been a sharp drop that's coming through in the market. So if you can just pull up the key index, you can see that in the past 10 minutes, we've lost around 60 points. There you have it on your screen. So currently, it's a 270-point cut that we are seeing on the Nifty, 1.5% lower. The mid-cap index is also seeing losses widen, so 2.2% lower on the mid-cap index. And in the past few minutes, this pain is really coming through on some of the big auto names. So take a look at M&M. You have Hero Motors, Tata Motors as well, which have all moved sharply lower in the past few minutes. Of course, Reliance is a big drag today as well. It is around 2.3% lower.
Amongst the heavyweights, Pavitra, if you really look at it, the financials, the bank Nifty counters are the ones which have been leading the charge, and even other financials. So HDFC Limited, which is not part of Bank Nifty, but is a big heavyweight. So take a look at those two counters. HDFC Twins, in terms of its movement, has really slumped in trade in the last few minutes of trade, and that's why it has given a big knock to the overall market as well. So keep an eye out. 0.9% down on Bank Nifty at the moment, and Reliance Industries being over 2% down is also a huge amount of damage really coming in for the markets, and definitely bigger weakness seen in mid-cap universe, 2.24%. So immense sell-off seen in the mid-cap and the broader market that we're seeing, Pavitra.
Oh, absolutely. And that's that you have on your screen right now as well. So it is the mid-cap index which is currently seeing the biggest cut. It's down over 2.2%. We're going to come back to the market action in just a bit. That remains, on top of mind. But here's some interesting opinion. With the insurance regulator IRDAI planning to dematerialize insurance policies, we spoke to Anuj Kumar, Managing Director and CEO at CAMS, to understand the impact of this in depositories. And he believes that this move will, of course, be uniformly positive for such companies. Listen in.
And like you've seen in other parts of capital markets, banks, etc., I think the repositories will emerge as very strong for both reasons. One, of course, there is a large mass of, upwards of 25 crore policies which will come up for dematerialization in the market. On the general insurance side, there is a large mass which will come up for fresh issuance, again on the DEMAT side. And then all these several tens of crores of insured population of the country will start interacting with insurance companies more on the digital and electronic form, which is a long-term change. And like I said, it has been a long-standing bastion, but the last bastion, which will now slowly go away.
All right, let's take it straight to some capital market action then. It's a CNBC-TV18 exclusive. Some news coming in from the primary market. Well, sources suggest that Mankind Pharma is looking at a Dalal Street debut and will soon be filing its DRHP for an IPO. Vivek Iyer is here with all the details. Vivek, tell us.
Well, that's right. Mankind Pharma, one of India's largest pharmaceutical companies, especially in the protection space. Now, after quite some time, you're expecting to see such a large deal in the pharmaceutical space. And when you're talking about Mankind Pharma, the entire issue, what we're hearing, is likely to be an OFS, an offer for sale. The company has filed for the DRHP, is what we understand. And in fact, some of the earlier reports had suggested, that the IPO could be as high as 1 billion. We understand that this particular IPO at this point of time might be pared down slightly in terms of how much they are looking to raise. But what we understand is that 10% dilution is what you're expecting as far as the pre-IPO shareholding is concerned. The promoter entities are expected to sell close to 2.5% stake. And interestingly, existing institutional investors are looking to pair almost 7.5% stake. We understand that the entire purpose of the IPO was to provide an exit to the institutional investors. So who are the exiting investors? We're talking about Capital Group, two entities there, and we're also talking about Chris Capital that is looking to partially exit their stake as far as this particular IPO is concerned. Some of the key brands for the company include Manforce as well as Prega News, and it's going to be an interesting IPO in terms of how exactly the retail participation pans out.
Oh, absolutely. And we'll wait by to see how that goes. Vivek, thanks a lot for bringing us all of the details. But with that, let's shift focus to some important corporate commentary coming through from Chairman of the Hinduja Group, Ashok Hinduja. In an exclusive chat with CNBC's Tanveer Gill, he says that they're eyeing NBFC and insurance targets in India, and the focus across businesses is on new technologies. Listen in.
We are in 11 sectors of businesses. Our focus is more on auto, which is our flagship company here. Ashok Leyland. Our focus is more on banking and financial services. So we are now bidding for other NBFCs, insurance companies. So we are focusing more investment targets here.
Right.
And future is digital, future is new EVs. We are already in electrical vehicles. It's being, since last 1 year, they are in Ahmedabad, they are in Chandigarh, they are in Bangalore. So they are all growing. Right. And not only that, even in the banking sector, financial services sector, the new technologies will come in, the fintech will take over. So we are all going into that. We are going into cyber security. We are already in the cyber security. We are already into the high-tech technologies on the Hinduja tech. So we are all now moving towards new technologies.
All right, on that note, a quick break on Business Lunch. Come back for more news and market action.